Hey there, financial freedom seekers. Welcome back to Capital Course, where we turn market wisdom into wealth-building opportunities. I'm thrilled to have you here today because we're diving deep into something extraordinary, the collective wisdom of the world's most successful investors. You know what's fascinating? The combined net worth of the top 10 investors globally exceeds $350 billion. That's more than the GDP of many countries. But here's the thing. Their real value isn't in their bank accounts. It's in the priceless wisdom they've gained over decades of market mastery. Today, we're going to unlock 3 game-changing areas that have shaped their success: the mindset of market masters, strategic wealth building, and risk management. Trust me, by the end of this video, you'll have actionable insights that could transform your investment approach. The mindset of market masters. Warren Buffett's investment philosophy. Let me tell you something about Warren Buffett that changed my perspective forever. While everyone was chasing hot stocks and quick profits, Buffett was building Berkshire Hathaway into a $700 billion empire by following one simple principle: be fearful when others are greedy, and greedy when others are fearful. I've studied Buffett's approach extensively, and here's what fascinates me most. He doesn't just buy stocks, he buys businesses. When you look at a company, ask yourself, would I want to own the entire business? Would I be comfortable holding it for 10 years if the market closed tomorrow? The results speak for themselves. A $1,000 investment in Berkshire in 1965 would be worth over $20 million today. That's the power of patience and discipline in action. Ray Dalio's principles. Now let's shift gears to Ray Dalio, founder of Bridgewater Associates. What strikes me about Dalio is his concept of radical transparency. He built the world's largest hedge fund by creating an environment where the best ideas win, regardless of who presents them. I've implemented some of Dalio's principles in my own investing, particularly his approach to understanding economic cycles. He teaches us that markets move in patterns like seasons. Just as you wouldn't wear a swimsuit in winter, you shouldn't apply the same investment strategy to every market condition. Strategic wealth building, asset allocation wisdom. Let me share something I learned from Peter Lynch that revolutionized my portfolio management. Lynch famously said, "Know what you own and know why you own it." It's not about having 100 stocks. It's about understanding each one deeply. Charlie Munger, Buffett's right-hand man, takes this even further. He advocates for concentrated investments in your best ideas. As he puts it, diversification is protection against ignorance. It makes little sense if you know what you're doing. Market timing versus time in the market. Here's a truth bomb from Jack Bogle that changed my entire perspective on investing. Time is your friend. Impulse is your enemy. The founder of Vanguard wasn't just talking. He revolutionized investing for the average person through index funds. Let me show you something powerful. If you invested $10,000 in the S&P 500 in 1980 and stayed invested, you would have over $760,000 today. But if you missed just the 10 best market days, your return would be cut in half. That's why I always tell my community, it's not about timing the market, it's about time in the market. Risk management and protection. Howard Marks, Risk Principles. Howard Marks taught me something crucial about risk. It's not just about what can go wrong, it's about understanding what most investors are missing. This is what he calls second-level thinking. Let me give you a real example. While everyone was panicking during the 2020 market crash, second-level thinkers were asking, what companies will emerge stronger from this crisis? Those who bought quality tech stocks during the dip saw their investments double or triple in value. George Soros' reflexivity theory. George Soros' theory of reflexivity is fascinating. He teaches us that markets aren't just reflecting reality, they're creating it. Think about it like this. When investors believe a company will succeed, they invest, which gives the company more resources to actually succeed. I've seen this play out countless times in my investing career. Take Tesla, for example. Investor confidence enabled them to raise capital easily, which funded their expansion, which justified the initial confidence. Conclusion. We've covered a lot of ground today, but here's what I want you to take away. Successful investing isn't about following trends. It's about understanding principles that have stood the test of time. Here are your action steps. 1. Start thinking like a business owner, not a stock trader. 2. Understand your investment time horizon. 3. Focus on risk management before return. If you found value in today's video, hit that subscribe button and join our community of investors who are serious about building long-term wealth. Remember, in the world of investing, knowledge truly is power. Until next time, this is Capital Course, helping you build wealth one principle at a time.